A damaged name. Do you ever feel prejudged as a reverse mortgage professional when you're interacting with the general public? Welcome to this week's edition of Friday's Food for Thought, brought to you by Reverse Focus. It's unfortunate but true. The words reverse mortgage have become synonymous for many with poor, cash-hungry seniors, questionable lending practices, and even the butt of jokes in some cases. Now, this has led some larger HECM lenders to use alternative names to market the loan. And while the program has been overwhelmingly positive for past borrowers, as evidenced in surveys, the reality remains of a name that is reputationally challenged. With the recent enactment of the financial assessment and also expanding acceptance of the program by financial professionals, we stand at a crossroads in opportunity. Do we continue to use the same name or rebrand ourselves? The effort to overcome perception bias, which has been built over the last 20 years, is a monumental task. Now, this is compounded by the media, which loves to sell bad news. If it bleeds, it leads. While incidents of misconduct and foreclosure are not the norm, they are perceived to be, with the media highlighting reverse mortgage horror stories. Beyond isolated issues, half-truths and misconceptions are those that are reinforced by an ill-informed and biased media. It is difficult to open a dialogue with a prospective borrower when our first words often invoke fear and misunderstanding. Some lenders have created specialized names such as the Life Mortgage for Seniors, amongst others. Some have taken to using the phrase new reverse mortgage. Now, perhaps the name to rebrand our collective reputation is hiding in plain sight: the home equity conversion mortgage. We can easily forget that this is in fact the proper and legal term for the program. The term reverse mortgage was beneficial in the early years of the program, helping American consumers wrap their minds around the idea that the HECM is in fact a mortgage in reverse, one that pays the borrower. But unfortunately, the name became quickly confused in the early years with questionable non-government insured equity sharing loan programs, which were often egregiously unfair to the homeowner and heirs alike. And while the term reverse mortgage is helpful in revealing the unique nature of the loan, the term is perhaps more detrimental than helpful today. Other countries offer a similar product under names like equity release, lifetime mortgage, and home equity release, or HER. As our industry moves into a new era, perhaps our name and branding should as well. Now, what are your thoughts on the word reverse mortgage, and what alternatives would you suggest to use instead? Leave your comments in the comment section below, and have a great week.